This is ForexOverviews.com with the short-term analysis for euro-dollar forex pair. Here we can see that by the daily chart, market has broken above this black line, which is the upper border of the triangle consolidation that we have been talking about on previous weeks. It broke it up, and now it's testing this downtrend line, which is a longer one. As we can see here on the contracted daily chart, this points from this point here, the whole down way here, and it's a longer term downtrend line. And after breaking out, the triangle market is now fighting against this another important structure of resistance, which is this trend line. It tested the 134 important resistance zone, and we don't know if it will have the power to really break above this line, and we don't know what will happen here, so we must take a look at the intraday charts to understand the situation. But firstly, let's take a look at another overviews. And here we can see the 618 Fibonacci resistance. Market is testing it for the second time, so maybe it's weaker and market will have more power to go up. Here by the Choujin-Napoli framework, market has still a bullish trend. It's above the red line, which is the MACD predictor, and it take out the previous top by making many stop grabbers. Now market is in retracement, so maybe it will retest this red line again. And by the displaced moving average, we can see that the market is contained above all the MAs, and especially the 25/5, which is this blue one, which signals the trend for the longer term. Okay, so all of this shows the bull power of the market. By the price action framework, we can see how the market respects this framework, how it respects the signals, the rotation signals that have been made here, and all the signals in fact has already worked, and this shows that the market is still at an uptrend and in a healthy bull trend until this moment. On the 4-hour time frame, we can see that the market is trending above this trend line. We have plotted it right at this way on the previous week, but now it makes more sense to adjust this line to here. Now we can see that market is at support, right? The stop and the level of 133.40, and in fact market seems to be trending in this upward channel. It tested the upper border and now seems to be in retracement. And now by this chart, which is in my opinion the most important of this analysis, because here we can understand the levels that are most important for the short term on euro dollar. And here we can see that market has completed the 127 extension of this butterfly, so it reached an important intraday target and now is starting a retracement. It tested the 38 Fibonacci support from this up move, okay, and maybe market will reach this first area marked by the yellow rectangle. By the way, these are the confluence support areas, which are the confluence of Fibonacci of the 38 and the 618. When they are together, it's called the confluence support area. So maybe market will reach this first by making some ABCD, as I have shown here. And this area is important because this is the weekly pivot point for the coming week, as we can see here. Okay, market will open above the weekly pivot point, and maybe it will reach it by doing some ABCD to the zone. All right, and if the market passes below the zone, all right, if market breaks below the first zone of confluence, we have also this another one, which is, in my opinion, is the most important for the short term, because this is the weekly pivot support 1, as we can see here. All right, and we know that the market, when it's in an uptrend, usually the retracements are held by the weekly pivot support 1. All right, so if the market breaks below the zone, below the weekly pivot support 1, it will signal some power for the bears, and it will not be a good sign for the bulls. Okay, and also this zone is the target of the bearish engulfment on the daily time frame. As we can see here, the market has formed a bearish engulfment, and the target is the length of the bars, and this target is exactly at this zone. All right, so we can accept a retracement on the market up to the zone, but if the market breaks below it, as I have said, this will not be a good sign for the bulls. It will put this whole uptrend under question. All right, maybe the market will reach the zone by making some bigger ABCD, for instance, something like this. Okay, maybe the market will reach the zone. We don't know what will happen. And also this zone also contains more important structures of support beyond these ones. Okay, I would say that these 3 structures here are the most important: the weekly pivot support 1, the confluence support on the 4-hour chart, and the target of the bearish engulfment of the daily time frame. But we also have here on the same zone the 100 period moving average on the 4-hour time frame, and usually this moving average holds the market, as you can see here. All right, usually when the market is an uptrend, usually this MA holds the market. In most cases the market is held by the 50, but we can accept as a holding point the 100 period, and it's also on the same zone, on the 132 and 50. Right, 132 and 50. And also this would be the lower border of this channel. Right, so if the market breaks below this border, if the market breaks below the 100 period moving average on the 4-hour time frame, if the market breaks below the weekly pivot support 1, target of bearish engulfment, confluence support zone, this will not be a good sign for the bulls. So as we can see here, this is very zone of support, and also this would be the lower MA on the price action framework, the 132 and 30, 132 and 50. Okay, so we must pay attention on how market will behave below the zones. Right, we don't want to see some splashing moves, some strong moves to the downside, as candles like this breaking below the zone. Right, and of course market could not do any retracement, it could just start to go up, because as I have already stated, it's at support, retesting the previous top on the 4-hour chart, and it's already testing the 20 period moving average, which is also a nice support. So in fact, if the market breaks the high of this bar by some bearish engulfment or something of that sort, it would trigger a signal to go up on the market, to go long. So we really don't know what will happen, if it will continue the retracement, if it will go above for the 1618 extension of this butterfly, for taking out these hikes, for really breaking above this line. But if the market retraces, these are the most important levels that we must pay attention, this one and this one. By the Jojo-Napoli framework, we can see that trend has turned to bearish on the 4-hour time frame, signaling that some retracement should come, but price is still above the 25/5 moving average. Okay. On the hourly chart, there is not much to comment, just that the market has reached some targets of inner ABCDs and has started retracement. The Jojo-Napoli framework on the hourly chart shows strong bullish trend, and the market has already broken below the 25/5 moving average. So by the hourly chart, we can see that retracement is already in action, but in fact we don't know if this will be a deeper one or if we'll just take the market to the upside with this single leg retracement. Alright, we can see here also the price action framework on the hourly chart. It's showing a strong, very strong uptrend. Right, on the contracted chart we can better see it, and we had many signs to go up with this framework, as we could see here. Right, market tested the upper MA, so it signaled an up move. Also here, right, entry points that you could have been used to go long. Also here, right. And this shows that the market is still in upward action. Also take a look that the 132 and 50 level that we have specified on the 4-hour chart would be below the lower MA of the price action framework. As a conclusion, we can say that the market is at the evening of deciding its way, if it will really break below the zone of important resistance. It's now testing this line, and we can accept a retracement until the 132.50 zone, although it would be below this line, making market return right here, but maybe market could test it by some piercing move. Okay, so this would be the most important level, and we must pay attention to see what will be the outcome of this action on the zone. Right? Thanks for watching.